what it says, today is 1st of May. Volatility Beach Hotel operates, it is also an examination paper or model question paper. Okay, it is a model mock exam paper, I can say like that. Operates a hotel providing accommodation, facilities and restaurants. Divide the sentence. First sentence, they will tell you about know the company, okay, know the entity. It was year end. Its year end was 31st October. You are an audit senior. This is your role, okay, of Mario, and you are currently preparing program for the audit year end. You are reviewing, means audit planning also comes into picture, okay, audit planning comes into. You are reviewing the notes of last week meeting between audit manager and finance director, where two material issues were discussed. What are the things? They have incurred capital expenditure during the year on updating the leisure facilities. The finance director has proposed that new leisure equipment should be depreciated on the straight line method. Is that they have incurred capital expenditure and they have incurred the capital expenditure leisure facility. The director was to say that it should be depreciated. Now, what is there is one concept was there where we are talking about the differentiating between the capital expenditure and the revenue expenditure, okay, revenue expenses. What they are asking, they are talking in terms of substantive to obtain sufficient and appropriate evidence. 4 marks, okay, 4 marks. It is, if it is 4 marks, make it a point, 4 points only. They say it is described. These are the things. Is it right? Again, is that you have to tell like a transaction how it has been happened. Discuss for obtaining sufficient and appropriate evidence. Keep it in mind. They say we are working with what? We are working with the capital expenditure. Is that we are working with the capital expenditure. Focus on the capital expenditure. I will go a little bit backwards, okay, where we have done. Now you have to tell me where we have covered capital expenditure, okay. I'm expecting this from you. Is that this is self-constructed assets. Is that, see the things here for two additions, okay. When you are additions, what are the substantive procedures we are doing? We are talking about the leisure facilities. Is it right? Assume maybe they have suppliers invoice. You are talking in terms of point number 2. See, I have put there at the time. If at that time while explaining, I put the star mark also here. Is that inspect non-current accounts for sample of purchases to ensure that it has been allocated properly. Point number 3, appropriate claims for grants, if any, received. Verify the additions has been recorded, scrutinizing the non-current asset. Is it the same thing we have to multiply? Now you will ask me whether we have to memorize. No. Plus or minus we have to write. What are the things? We have to verify additions by inspection. Okay. In terms of, we don't have architect fees, we don't have solicitor complaint. We have suppliers invoices will be there. Okay. Next, we have review capitalization by examining non-current. If it is given in the non-current asset register, then subsequently it is a capital expenditure. Is it right? Second point. Third one, inspect your non-current assets accounts. Fine. Fourth one, appropriate claims had been made for grants. There no grants are there. Okay. Verify the additions has been recorded by scrutinizing the non-current register and the register. These are the immediately. Now I expect you should be very, very sharp. Is that pinpoint accuracy? You have to immediately say that we have done in lecture 5, we have done in lecture 7. Is that you now you know more subject than me because you are revising all the time. Fine. Now what it says, The same thing happens. Is it right? Fine. The same thing happens. See the thing. What you are doing? This is a sample question. Okay. Describe. Okay. Obtain analysis, detailed analysis of leisure facilities expenditure. Because they are talking about leisure facilities expenditure, we have to know the detail analysis. Okay. Once you get the detail analysis, we can say that it ensures it has been capitalized rather than it has been expensed. Okay. When the director, finance director is saying that it has to be capitalized, then definitely there will be, we have to verify only those things. Next, what was second one? They are saying that it has to be depreciated over 10 years life. What is the policy of depreciation leisure equipment? Definitely there will be a depreciation policy. Is it? Now, when we are talking about depreciation policy, what is the usually? See, this is all on paper. Okay. What is the policy of similar like a car insurance policy? Okay. We will have 15%. Every company will have 15%. Okay. Likewise, what is the, for every type of asset, there will be a policy will be there. So lab system, computers will be there, gadgets will be there, equipments will be there, cars will be there. Likewise, okay. What is, we have compared the policy of depreciating. See, only thing I am telling with all my assurance, all my way is right, that only this the specific equipment will change, other things will remain same. Is it? And review the gains and losses on disposal or assets during the year to assess the reasonableness of the depreciation policy. What will happen? You are making an addition. Is it right? See, why we are talking in terms of depreciation? Depreciation is used because whenever there is a replacement. Is it? Whenever there is a replacement of an asset. Now what happens? Now what happens? They have upgrading. What they are saying, go back again. They are saying that incurred significant during the year updating the leisure facilities. Definitely updating means they are replacing the old facilities with the new facilities, new furniture, new equipments, whatever it may be. Is it right? That then we have, it means they have, if they have made any disposals during the year, you have to assess the reasonableness. Still, my observations from my side is still the language should be with reasonableness. Is it reasonableness? These are the words, specific words. I am putting it with purple color, stating that this is the words we have to use in our answers. Okay, these are the words to ensure expenses are correctly capitalized. Okay, needed. Okay, rather than ensure we have to expenses. Okay, I will use purple color. Wherever I am using purple color, that is going to be the words we have to, keywords I can put like that. For a sample of additions, recalculate depreciation charge. For any sample of additions, any facilities, any equipments, you have to recalculate. Is that you have to recalculate to ensure that it is correct. Okay. First, what we are doing? The first we are obtaining a detailed analysis. Then you are comparing the policy. Then you are recalculating the depreciation. The fourth one, we are performing a proof of total for accuracy. And the last one, we are inspecting draft financial statements, whether for disclosures and presentation, that non-current assets and depreciation policies. Again, I will repeat. First, we will obtain a detailed analysis. Then we compare the depreciation policy. Third one, we will, for a sample of assets, we recalculate depreciation charge, whether it has been done correctly or not. Fourth one, We will do the retotaling, proofing the total, retotaling of the related accounts. Then last one, what? Whether we have done completeness. Okay, in what we are doing here, we are talking in terms of what? Here we are talking about completeness. Whether we will say that it has been disclosed in respect of non-current assets and depreciation policy, presentation, disclosure and presentation. How much they say? Slowly and steadily. See, what I will do now, I will start this process. Understand point? I will send you the screenshot of the questions. You can refer, I don't have any doubt, but when you are writing it, it has to be typed and it has to be written without seeing the answer. Without seeing the answers. Anywhere till the last 9 lectures, I will give you, every day I will post one question. Every day I will post one question in the group. You have to do it individually, type it and send. You have to take the screenshot and send me that. Very important. Before writing, you can see, you revise. But once you close the book, once you close the screen, the moment you start writing, you should not see. Fine? Now, what they say, this is, are you clear about this?
So can you just clarify the fourth point? Yeah, perform a proof in total for depreciation. What do you mean by this?
See, reperform the total for the depreciation charge and the, see, you have calculated depreciation. Is that you have calculated depreciation for the assets? Just we are making it retotaling. You have planned and you have facilities. Is it right? You have facilities. Maybe you are having so many. You have added so many different facilities. What they said in that updating the leisure facilities. You are not doing one. You are doing multiple facilities. You are doing. When you have multiple facilities, you are doing. See, what is the most important? You have to have a total with respect to rows and total with respect to columns. Is that just we are doing the totals? Even you are doing in Excel. Is that you are doing in Excel? You have to make sure that again you have to make that correct range has been given or not. Your total of assets which has been added and total of depreciation which has been calculated. That yes, the total is right. Yes, tell me.
Here you mean depreciation expense or accumulated depreciation?
Depreciation charge is depreciation expenses only, na?
Okay. Okay, got you.
Okay. Next. Understand my point? From tomorrow onwards, I will start this process. Okay? Immediately, every day, the moment I will start, within 24 hours, you have to give. Is that it is for your benefit? It is you are keeping updated. Fine. Describe procedure to perform at the year end to confirm plant and equipment additions. Is that what is there with respect to additions? Just go to the back. Okay, to the again the same thing I think we have. Is that this is with respect to disposals. This respect to with additions. Is it right? What we are doing? You are talking in terms, if you are additioning, you have to take supplier's invoice, you have to review the capitalization of expenditure, inspect non-current asset register for purchases. Is it right? Ensure that any two you have to write. Is there any two specifically verify the additions has been recorded by scrutinizing the assets? What they have mentioned, note that the question states plant and equipment. Okay, this is not leisure facilities. It is so make sure that you do not include test relating to property. Now you see the difference, very marginal difference. Okay, marginal difference. In plant, they are asking plant and equipment. Means you should focus on plant and equipment. You are asked for substantive, so do not include test of controls. There are 2 marks in total. They suggest you have to score 1 mark for each well explained audit procedure. In the examination, in all the past question papers, you will clearly come across audit procedure repeatedly. Repeatedly you will come across audit procedure. Is that make sure you are test. These are, see, I will tell you, for me, these points are very important. Once you understand these points, automatically our presentation will be more easy for us. Make sure your tests are sufficiently precise, detailed, as vague answers, means open-ended answers, will not score very well. Build the things on this, okay? This is nothing but the feedback the examiners will give. Inspect a sample of additions that they are physically exist. That's very important, okay? Whenever there are additions, you have to physically inspect the new additions. Cast the additions to and match the total back to the non-current assets register. Fine. What happens? See the thing. There are 2 ways of doing. Is that non-current asset register? Is that this is, see, we are not that much focused on this. Is it right? It will come to what? It comes to the ledger, general ledger, financial statements. Is it right? First you have to record in the non-current register, then every accounting process will be initiated. General entries, ledger, general ledger, trial balance, all the things will come. You have to go from the non-current asset register to the ledger, first case, and to make sure that what is there here amount, means if you are mentioning 10,000 here, this 10,000 should be reflected in the ledger. Fine. Now, when you are saying 10,000 is reflected, again what you have to do, once you have done this 10,000 is matching with the register or not. Two-way confirmation we are doing. Is a two-way confirmation. One is we are talking from the beginning to the end and from end to the beginning. If you remember correctly, this we have studied somewhere in the test of controls. Okay. Now, what it says, cash cost means again total. Total the list of additions and equipment and match the total back to the non, means you have to do the total here. Is a total of all the new additions, is it right? Total of all the only new additions. Here also you have to take the total of new additions. Is that this total is matching with this total and this total is matching with this total. Fine. That's very important. Recalculate the charge for the year for sample of additions. Only for sample of recalculate. What were the 10 straight line method, return down value. For a sample of assets, you have to do recalculate. See, simple points. Repeatedly, we are going to focus on this. It will be fixed in your mind. Very simple. Okay. Recalculate the depreciation charge for a sample of, and ensure that it is correct and in line with what? In line with the depreciation policy. Is in line with the depreciation policy. Specifically they are asking, okay, see, this is, you have to write depreciation policy for what? Depreciation. You should not say that in line with the depreciation policy. Depreciation policy, we are focusing exclusively on plant and machinery. We have to write plant and equipment. What we are doing, we are calculating the depreciation charges for the additions to make it correct with the line with the depreciation policy, specifically with plant and equipment. You have to use plant and equipment repeatedly. Is that repeatedly? Focus. No, it should not be vague. Okay, it should not be vague. It should not general. Okay, that's very simple. Inspect purchase documentation. You are making additions. Is it that when you are talking about the purchase document, invoices? Is that you are inspecting a purchase document for sample of whether it is in the name. In the invoice only it will be there. That the name of the company. To confirm, why we are saying? To confirm rights and obligation. We have to write any two. Okay, we have to write any two. Is that we have to write any two? Is that what we are doing? We are inspecting purchase documentation. You can write purchase documentation means there are so many documentations are involved. Is that if we say purchase invoice, fine, it will work. But if you say purchase document, definitely we are covering a broad spectrum of documents. Is it? Now, for a sample of additions to that, it should be the name of the company. Is that it should be the name of company to make it rights and obligation. Inspect. Now, this is very important. Okay, whenever there is a plant and equipment, okay, it's usually it will be of high value. Is that usually it will be of high value? Definitely, if it is high value, it will be approved by the board of directors. Okay, it will be approved by the board of directors. It's not a small value. We have to assume, and it is, we have to assume blindly. I'm telling you this. There is no ifs and buts. Whenever you are talking about the additions, plant and equipment, isn't it? It is. We assume that it is having a major amount of expense. By the way, whenever we say it is a capital expenditure, is that whenever it is a capital expenditure must, I can say like this, must have the approval of the board. Must. It is not should. It should be must have the approval. It has to be approved in the board. When you are reviewing the board minutes, okay, meeting minutes, during that capital expenditure was authorized appropriately by the board of the company. Is that?
But last point is not related to internal controls.
No. See, we are not talking about internal controls at all here. That is the reason. You have to, that's what it has paid. You see, this is, they know before you are asking. In the previous case, they have made very clear. In the instructions, what they say, you should be this. Here they have mentioned very clearly that by the substantive test. Is that you should be very clear. You firstly understand the difference between. Is that first you should understand the difference between substantive procedures and test of controls. Now, when we say test of controls, okay, when we say test of controls, we are saying controls exist, controls are effective or not. Is that there is a very thin margin in that. Now, for your information, for your reference, I will go to the where we have covered test of controls in chapter 8. In chapter 8?
Yeah.
Is it right? Now, in chapter 8 we have covered. This is where it says, see, authorization. See the thing. What we are doing in authorization, that it has been authorized. What is the test of control? We are reviewing the policies and procedures are in place or not. Is it? Is it whether first what are the controls? Orders for capital items should be authorized. Is it? We should be authorized. Is it? Next, orders are appropriate, documentation is correct or not. Then we'll see whether we will use the sample of orders for appropriate authorization. Is right? We only see whether authorization order. You will say that invoices should be approved by the person who authorized the order. Then you inspect invoices. Is that invest invoices that has been approved or not. Next, what we'll do should be marked with general ledger code. You will see whether coding is there or not. Is that this is with respect to authorization. Now, if you go further back, okay, I will make this is the payroll. Okay, this much is there. Okay, this much is there with respect to revenue and capital expenditure. Authorization is there. Completeness is there. Is that or classification? Ensure that classified in the financial statements as capital as for purchase system as per the this is where it's a. Got my point? This is with respect to test of control. Now coming back to our this one. Is it coming back to this one? It says there's a clear cut difference. Okay, you are inspecting board meetings, inspecting the board minutes. Okay, we are substantive procedures means you are inspecting the minutes to ensure that the capital expenditures has been authorized appropriately by the board. In the test of controls, we are verifying whether it has been approved or not. Is that here we are inspecting the minutes. Okay, here we are inspecting the minutes. Means we are going one step ahead. Okay, test of controls is that I will put like this. This is why this is the only thing we should be clear. Test of control. First you will have a control, then you will have a test of control. You're going further step. You will do a substantive procedures. Is that you will do the substantive procedures. What is that? You are inspecting documentations. Is that of additions to verify it is in the name of gracious. What my understanding says and what I will miss. In substantive procedures, you are doing two different tasks. Is that you are doing two different tasks. One side you are inspecting the minutes, and second side whether it has been authorized appropriately. One side you are inspecting the documentation, and the other side you want to know whether the invoice is in the name of the company. One side you are calculating the recalculating the depreciation charge, and other side what you are doing whether the depreciation is done as per the policy or not. Is that two things are going side by side. Okay, means you calculate the depreciation charge and you cross verify with the depreciation policy. You will cast a list of additions, plant and equipment, only additions, and you are going to back to the register whether the additions, total of additions and non-current asset registers are matching or not. Substantive procedures. Is it right? In all the cases, see the thing. I will put a separator like this. Okay, I will put a separator. What you are doing? Recalculate the depreciation charge for the year for sample of additions. That it is correct. And is it right? And in line with the policy. Is it right? And inspect purchase document for sample of addition to verify it is in the name. Okay, it is in the name. Again, what we are doing, whether it is in the name, we are matching. Is that we are not testing the controls. Is it right? We are matching two documents to make it more specific. Inspect board minutes during the year was authorized appropriately by the board. Is that you are inspecting during the year to ensure that whether the capital expenditure has been authorized by the board or not. Yes, please tell me now. Is it clear?
Yeah.
Is it? This, if you are raising this doubt, means you are understanding the subject. Understand? If you are raising this doubt, anyone raising this doubt, what is test of control and substantive, it is that we are focusing now that yes, there is a very thin difference between these two. In the examination, you see past question papers. If you refer 4 question papers, 3 question papers will have this difference between test of control and substantive procedure. They will give you for 3 marks. They will give you for 3 marks, and you just make sure that you memorize that answer. Okay, it is only 3 lines, 1 sentence for test of control, 1 sentence for substantive procedure. Is it right? Now, can I go to the next one, please? Can I go to the this one, point number C?
Yeah.
Is it? Describe 2 substantive procedures. What they say? Valuation, completeness, rights and obligation. 2 marks each. Is it right? 2 into 3, 6 marks. See, what we have to do, valuation. I will go, valuation is there, completeness is there, rights and obligations is there. Okay? Valuation is there, completeness is there, rights and obligations. Where is valuation? Rights and obligation, valuation, complete. Existence, complete. Just go through this. Take any 2. Okay, take any 2. Your convenience. Is it your convenience? Is it? Obtain a summary, whichever you find easy. Reconcile schedule of non-current assets with ledger. Okay, for a sample of assets which physically exist, agree in the recorded. Okay, when I am giving you this, you refer and write down any 2. Okay, this is with respect to completion. Next, with respect to valuation, valuation certificates. Is it which type of substantive procedures they are asking? That's very important. Is there for which type of substantive procedures they are asking? They are asking for property, plant and equipment. Is it? They are asking for property, plant and specifically this. And whatever we have done, it is related to property, plant and equipment only. Is it? Now, here it is there in terms of valuation. Reperform calculations of revaluation surplus. Is that small things you take. Consider reasonableness of revaluation, experience. Inspect, review insurance policies. It is also simple. Is that enforce for all categories of tangible assets and consider insured values and expiry dates. Okay, you take any 2 of your choice. Okay, with respect to rights and obligations, very simple. Rights and obligations is nothing but ownership. This is comparatively easy for us. Is that we are talking in terms of compare all vehicles are used for the business. Is a point number 4. Okay, verify title. This is very important. Title of the land and property, plant and equipment by inspection of deeds. With respect to land. Okay, anything inspection, registration documents for vehicles. Is it right? That they are? It should be, when we are saying rights and obligation, you have to match the invoices, and in the invoices the name of the firm should be there, and whatever the assets we are using, it is for the business purpose only. Is that review any leasehold properties? It has been any conditions are there. Okay. Now, is it okay with you?
Yeah.
What they say, see, this thing makes easy for us to understand. Okay. Now you are focusing everywhere. There is a question. They're saying that your understanding of assertions. It is important that you should understand how to test them. There are 6 marks that you have to able score for, 1 mark for each. Make sure you only provide audit procedure for the specifically asked. Do not include test of existence. You are specifically asked 2 procedures. For sure, do not do more than this. You will not get. Every time they will, every other question they will make this recommendation for us. Is that you don't write more than what you need. Is it right? No, this answer has more than 2 procedures for each assertion. You have more than 2, but you have to write more. You have to take only 2. Now, what we are doing, slowly, steadily, simply, is it? Slowly and steadily. I will put this again, this is a summary. Okay, this is the summary. Valuation. Okay, they will ask 2 only, not more than 2. Maximum 2 in each category. Maximum 2. Okay, or 3 if you take that much. They want to know that you understand the substantive procedure, audit procedure. Okay, what you have to do, obtain schedule of equipment for a sample of this, the amount capitalized to the purchase invoices to obtain a schedule of property, plant, equipment to confirm amount capitalized to purchase invoice to confirm valuation. Property, plant and equipment, it is a capital expenditure. 100%. Okay, 100%. It is a capital expenditure. That's the first thing you are to valuation. For any properties you have revalued to the, if any property revaluation, any revaluation has been done, revalued amount to the valuation report and the valuer in terms of scope, objectivity, assumptions and who has done revaluation. Is that we have to know who has done the revaluation expert. If it is done by the expert. When it is done by the expert, what is the first you have to see what is the qualification. What are the assumptions he has made. Revaluation should be done, revaluation should be done by the expert only. Understand? Only. There is no plus, there is no minus. Is it right? And when you are talking about the expert, you should make sure that whatever the revaluation is done, qualification, what are his assumptions, what is the objectivity, what is the purpose of doing revaluation and what is the terms of the scope. Which properties has been revalued. Similar properties are revalued or not. Is that first what you have to do? You have to obtain the schedule for the sample of this, whether it is capitalized to the take the purchase invoice. If it is a capital expenditure, you have to capitalize. If it is a revenue expenditure, you have to, means the first source of document is your purchase invoice. The second is, if it is done by the expert revaluation, then you should know the qualification of the revaluer. Okay. Third one, perform a total of total depreciation using the depreciation policy. I told you previously, again I will say this, IFRS 13, fair value measurement. Is that fair value measurement in financial reporting? Whenever you were making revaluation, is that whenever you are making revaluation, depreciation should be calculated on the revalued amount. Is that depreciation must be calculated. Okay, there is should and must. Must means there is no option. Must be calculated on the depreciation on the revalued amount. Is it on the this is the first and basic understanding we should have. That is what it says. Is that perform a total proof a total for using the depreciation rates for property and compare to the actual charge for the year where it has been, whether the charge appears reasonable. Is that you cannot say that we are making a revaluation. See, people are there. Okay, you will have the fraud. You will have the fraud and error. Why we are doing this? Only to make sure that things are going well or not. You will revalue the asset. A client will revalue the asset. Okay, revaluing they will revalue 100,000 to 400,000. When you are revaluing to 400,000, is it right? What will happen? You will calculate more depreciation. The depreciation charge will be more. Okay, when your depreciation is more, automatically your profits will decrease. Is it? That is the reason we are doing this. Is it? Prove the total test, and we have to say what is the. You have to compare this to the actual charge for the year to confirm whether the charge is reasonable or not. Fine. Otherwise, just by doing the revaluation, you are not supposed to. The rule says that you have to revalue, and depreciation must be calculated on the revalued amount. So you have to be very careful. What are the three things? Revaluation. You have to obtain the schedule of the PPE for a sample of this, and we should make that it has been amount has confirmed that capitalized as per the purchase invoice. Is it as per the first one? Second one, any revaluation has been done, then the revaluation should be assessed, value of the terms of scope. Okay, who has done revaluation, what is qualification, what are the assumptions, and what is the objectivity. Third one, depreciation has been done on the revaluation amount. Is that? And is there any, and depreciation has to be done on the revaluation amount as per the depreciation policy. Is that? As per the depreciation. This much you can write. I am not saying that you have to write those things. Understand, I am also putting my own words. Depreciation has to be charged on the revalued amount as per the depreciation policy, and we have to confirm the actual charge against the previous amount. Is it? You have to confirm the revised value against the actual value to confirm whether the depreciation charge is reasonable. Is that? Write in your own words. Okay, write in your own words. Is that this is the valuation? Why I am giving this? Again, we are not going to cover this. Straight away we will cover in the examinations also. Examination questions only. Okay, examination question. Now, completeness. Completeness means it has to be shown in the from beginning to the end. Okay, from beginning to the end. For a sample of assets which you have selected, completeness for physical inspection, trace back to the register. Now you understand this. Initially you will find difficulty. Trace non-current asset register is the primary source of document, the first document of non-current asset register. Non-current asset. To confirm that it has been included in the register. You are purchasing, first you have to include in the point of entry. Okay, first point of entry is non-current asset register. That is the first initiation. Perform a review of expenditures, okay, expenditure accounts, and select a sample of testing. Is that why? Perform a review of expenditure accounts, repairs and maintenance, and select sample for further testing. obtain invoices to ensure that these cost has been correctly expensed. If we have
This is
incurred
not
any,
classification assertion.
pardon?
This is not classification assertion.
Classification is what we are doing. Classification is we are doing with respect to capital and revenue expenditure. Is it right? Here what we are doing, we are talking in terms of where is the classification is there. We have the classification in our case. In the previous case we have classification. Where is the
I
completeness?
don't.
Complete. Prepare summary of non-tangible asset, gross value, depreciation, net book value. Compare non-current assets with non-current asset register. Annex. For a sample of assets, they are recorded in the non-current asset register. If non-current register is not kept, obtain a schedule of the original cost and present depreciated value of non. Reconcile the schedule of non-current asset with the things. What we have done? No. Classification is done. We have done classification here.
I don't think so.
I don't think so. Is it right? Classification where we have done in test of controls.
Yeah.
Is it right? Classification we have done in test of control. Obtain the just read again this one. Completeness. Summary of non-current register, gross value, depreciation and net book value. General ledger.
Maybe
Pardon?
maybe here we can redraft it instead of saying it have been correctly expensed. We can say all the capital expenditures reflected in the as capital assets or something, instead of saying have correctly expensed rather than capitalized.
Reconcile the schedule of non-current assets with the general ledger. Compare non-current assets with the non-current assets and obtain explanation for difference. For a sample of assets which physically exist, they are recorded. For a sample of assets which physically exist, agree that they have recorded. They have here, they have mentioned here in the beginning. Is it right? In that, prepare a summary of the showing what is the gross book value, what is the gross book value, what is the accumulated depreciation, and what is the net book value. They have not mentioned anything with respect to repairs and maintenance. In any other case they have mentioned, just check. We'll go from the beginning, okay? We'll go from the beginning. Completeness. All our additions and disposals in the year have recorded. Balances represents asset in use at the year end. Anywhere revenue and capital expenditure has been met. Somewhere we have done, if we have remember correctly. Classification. See, occurrence, presentation, occurrence. You see point number 5. Yes, Gaita, Laila. Focus on here. You question me, okay? Occurrence and rights and obligation, completeness, classification, understandability, accuracy and valuation. Disclosure relating to cost, addition and disposals, depreciation policy, useful life of assets, financial lease in accordance with the accounting standards. Completeness, it is not there. Existence, no. We are not talking about existence also. Valuation, no. Rights and obligations.
Yes.
Pardon?
Slide number 11.
Huh?
Slide number 11.
Point number?
Slide number 11. Additions.
Additions. Huh. Review capitalization of expenditure by examining non-current assets and items in relevant expense categories to ensure that capital revenue distinction is correctly drawn in and capitalization is aligned with consistently applied to company's policy. Here we have written C, capital expenditure, and we have done revenue expenses. But it is related to additions. They have mentioned it somewhere in completeness. Okay, they have mentioned somewhere in completeness. Can I go to the down?
Yeah.
Okay, fine. We will see. Okay. In additions, perform a review. Perform for details to the beginning to the register. Completeness, and this has been, is it refer 11, is it is in additions. Is it right? It is in review. Perform a review of expenditure accounts, and select sample of further testing. Obtain invoices relating to these to ensure that cost has been correctly expensed rather than capitalized. Means completeness means they are saying that the capital cost and the revenue expenses. Okay. The capital cost and the revenue expenses should be clearly segregated. Is that clearly segregated? That is what we can understand from this. Okay. Can I go to the next one, please?
Yeah.
Re-perform the reconciliation of non-current asset register with the general ledger. Is there investigation any difference? Definitely, when you are doing the reconciliation, if there is any differences, we can identify the differences. With whom we are doing? Again, with the source document and the end document. Okay, this is the first document. This is the last general ledger. Okay, general ledger is it leads to trial balance. Okay, general ledger is the thing which leads to trial balance, and then on the basis we are preparing. This is the source for trial balance. Okay, source of trial balance, and this is the source of purchases. Whatever is given in the non-current register should be reflected in the general ledger. First stage and the last stage should be equal. It should be matched. Then it is going to be a completeness. Is it okay?
Yeah.
Yes, sir.
No. In terms of rights and obligation, the same thing is that we have to know with respect to purchase invoices. Is that it has been purchased, obtain a schedule of PPE for a sample of this. that the amount capitalized to be purchased invoices to know that it has been purchased by the company. Inspect title deeds to ensure that it belongs to the Blueberry. Is it the title, the ownership documents? If there is any lease assets, is it lease? Because why they mention lease assets? Every company will have in the rights and obligation. Every company nowadays, every other business is taking on lease only. Okay, we take on lease and work it on that basis. We will not have ownership, is it right? For lease assets, any lease agreements to verify that has to be treated as whether it is a finance lease or it is a operating lease. You know the difference between these two? Yes or no? Yes or no?
Maybe operating leases is used for example, building of the company,
For?
the head office of the company, which is leased.
And financial leases?
Maybe the machinery and equipment which used in production.
In financial lease, ownership will be transferred. Okay? In the financial lease, ownership, in the operating lease, see here what will happen? The ownership will be transferred at the end of the lease period. Okay? At the end of the lease period. Is it right? If I am remembering correctly, this is IFRS 16. Is it right? IFRS 16 lease accounting. Yes. In the operating lease, the ownership is that ownership will remain with the lessor. Is it? You are, is it? See, you are, what will happen? I will tell similarly, okay? You are letting you have flats, okay? You have a building, 10 flats will be there. What? You will give the flats for lease, okay? This is operating lease. They will use it, they will pay you back. If they will use it, they will pay you back. It's a rent a car. You are giving it on lease 1 year. Ownership is not transferred. He can use it, that's all. Is that the ownership will not be transferred. Temporary ownership will be there, no permanent. Even you cannot say temporary ownership. It will be ownership. They can use it, okay? I am giving the example of, very important, I am giving an example of a flat. You own a flat and you are giving it on a rent. You own a car and you are giving, rent means it is for how many months? It is for more than longer period. Is it right? If it is more than lease means less than 99 years. Okay, you are giving for more than 1 year. If you are giving the car in the same way, okay. See, rent a car is different. Lease a car is different. Understand my point? You should make it. You are giving it a lease means for you they will use it and they will pay you back. Whereas financial lease is nothing but, is that financial? You are buying a car, okay? You are buying a car. What will happen once you have made the payments, okay? Your payments are complete. Automatically ownership will be transferred to your name. Ownership will be transferred to, till this much you understand. You don't understand more than this, okay? We don't need more than this, okay? Is that? For lease assets, review lease agreements to verify whether there should be a finance lease or it is a operating lease. 3 things are very important with rights and obligation. First, you have to, most important, you have to for a sample of assets, you have to see the purchase invoices, and the purchase invoices should be in the name of the company. Second one, you have to inspect the title deeds. Okay, definitely you will have your ownership title will be there. Legal evidence, is it right? That ownership is under the name of the company. And there will be some rights and obligations. Okay, whether rights and obligation is for a permanent in terms of operating risk or in terms of financial risk. Okay, on 1, 2 and 3. Again read this one. I am putting this on the purple color. Only thing we have a little bit doubt here. Okay, we have a little bit doubt with respect to point number 2 in the completeness. Is it clear? Just read very quickly read it. Any doubts are there, ask me. When I am telling you to read, it means I am expecting any clarification from your side. Is it clear to you?
Sir, can you refer to slide number 8?
Which one?
Yeah, the last part in this slide.
Examine invoices received after the year end cutoff.
This is cutoff assertion or what?
No. See what
How
happens.
does this relate?
Pardon?
How does this relate to right and application?
Yeah. How it is. Now what happens? See the things. Is it? Definitely you are purchasing the assets. Is it right? You are purchasing the asset. You should make sure that in which period it has been purchased. Okay, in which period? It is a capital commitment. Is that whether you have purchased before the year end or you have purchased after the year end? Is that you have purchased before the year end or you have purchased off? You have to mention in the right period. Is that now what happens? You have purchased the board has approved in the year 2023. Is that board has approved in the year 2023. Okay, the budget is for 2023. Fine, the budget is approved for 2023. Now what happens? You have raised the invoice, you have done everything. Is that? But what will happen? This is the decision of 2023. But you may receive this in the year when you are receiving in the year 2024. Is that? Your budget is for 2023. You are there. Then the budget is 2023. You have to account in 2023. Now what happens? It is a capital. You have importing machinery. Okay, you are importing machinery from outside the country. You have placed the order in the month of October. You have placed the order in the month of October. You have budgeted in that October. Is that the expenditure has to be done before 31st December. But what will happen? You are receiving it in the month of January. You are receiving is in the month of January. Fine. See, you receive in the month of January. It will be operationalized in the month of in next year. Is it? It will be operationalized in the next year. But what will happen? The budget is for 2023. Budget is not for 2024. You are using it. It happens normally everywhere. You are take the small consignment also, it will take us to have a 14 days delivery. 14 days delivery. You are placing the order on December 20th. You are receiving it in the month of January. Now where you will place this, you are going to write it in the December, or you will write it in the month of January?
December.
Is it? Examine invoices. You are receiving what? You see another way. They have delivered it. Okay, they have delivered it. Once they have delivered it, they will send the invoice. You are placing the order in December. You are getting the invoice. The payment invoice is in the month of January. Is that? Now this is very important. Okay, I will give an accounting perspective. Okay, I will give an accounting perspective. How you have to write a journal entry. How you have to write a journal entry. What we'll do? You are placing it on 1st of December. Okay, what you will write? You will say property, plant and equipment will be debit and payables will be credit. Okay, now payables will be credit. This happening in 1st January. Now this happens at the time of purchase. Okay, when you are purchasing. Now what will happen? This is on 1st December. You are receiving it on 7th of January. Is it? This is on 2023. You are receiving on 7th of January. Now when you receive on 7th of January, what is the entry you will write here? Anybody is there to tell me what is the general entry you will write here? Anyone?
It is receiving the invoice. And after payment, right?
Yes. Now you are paying. You are paying. Assume here you are generating you decided. You have placed the order. The moment you have placed the order, you will receive your asset. Property, plant, equipment debit. Payables will be credit. Okay. Now this is related to December 2023. Now you are making payment on 7th of January.
We will credit the cash.
Good. Debit will be?
Property, plant and equipment.
Huh?
Property, plant and equipment.
Already we have done the property, plant and equipment debit.
We would debit payables.
Debit payables. We will cancel payables. Okay. We will cancel payables as such. Okay. We will cancel payables. Okay. We will cancel payables. Payables will be cancelled. And what will happen? Property, plant and equipment will be debit. Credit will be cash. General entry is perfect. Keep it in mind. Whether you want to be an ACCA, general entry should be perfect. Fine. Now this is where happen. When you are you have to make sure that that is the reason of payables less than 12 months. Is that less than 12 months? We are making a commitment for in the month of 1st December. We are paying in the 1st of January. Next 7th of January. Is that? That is the reason we have to identify it as a payables. Is that? This is what it says. Examine invoices received after year-end orders. Okay, in year-end orders and board meetings for evidence of capital commitment. They have made the capital commitment, but they are received after year-end. Is that? They have received after year-end. It is pertaining to the current year. It is pertinent. You should not mismatch it. Otherwise what will happen? You are mismatching your budgets. you are mismatching your expenditure, and 1 year expenditure you are showing undervalued, and other year expenditure you are showing overvalued. That should not happen. Whenever you will audit property, plant and equipment, you will first verify which year it has been ordered. In that year there is a budget or not. And when it has been ordered, mostly we are purchasing on credit. When you are purchasing on the credit, what is the entry you have passed? Debit, assets increasing, debit. Is it right? Liability increasing, credit. Is it? This area, every student is little bit weak. Is it right? If the asset is increasing, it should be debit. If the asset is decreasing, it should be credit. If the liability increases, liability or equity, all are same. Okay? In this situation, if liability or equity increases, it will be credit. If the liability or equity is decreasing, it should be debit. You understand this with respect to assets and liabilities, your 50% of the task is complete. We will see only this. In the audit, what they will see? They will not see anything else. The primary thing is we will verify the source document. We say that whether it has been entered rightly or not. Is it okay, Gaita?
Yes, sir.
Fine. Anything else? You ask me. The moment you, that is the reason. We have enough time. We have enough time. You ask me, I will give more explanation and more different ways. Can I go to the last one we have stopped?
Yeah.
Okay, fine. Now, little bit, okay, when you are revised, I will give you this question. Today I will post one question somewhere. I will not tell, I will tell this is the chapter, this is the, from this chapter I have taken this. I will take the screenshot, okay, and post it. Refer the answer, okay, refer the answer. Read answer once, twice, thrice, as much as possible. Understand what it is saying. Close the screen, then you write down. Once you start writing, initially you will, I will telling you this, there is no restriction. Initially you start, assume, if I am going to send the same question, okay, the moment you will start, then you will remember something. I told you, read, revise, okay, read, revise, recollect, okay, recollect what we have done, what we have not done, is it right? Then you will, automatically you will remember it, is it right? The moment you are reading, if you start writing this, maybe you will find difficulty, go back, nothing will happen. Go back. When you are reading, don't write. Understand? When you are going back and referring it, keep your pen out of your hands. Once you are closing the screen, then you touch your pen. If it happens in the beginning, it will happen multiple times. I'm trusting you. In beginning, this is the way you have to work, multiple times. If you want to write 6 points, you will refer 6 times. Nothing will happen. You refer. The moment you are reading it, your pen should be out of your hands. Once you are closing it, take the pen and write. Then refer, then write. Refer, write. Automatically you see the improvement. Are you okay with this?
You mean reading the answer before writing it?
Yes. Read, nothing will happen. Read. But when you are writing, don't read. Refer. Read. Okay? When you are writing, you don't read. Even your screen is visible to you, don't see the screen. Once the on sentence, once the point is complete, then you see. Then you see what is there and what you have written. I am not asking that you have to write the same thing. The meaning, the message has to be clear. You write your own words. The meaning, the message has to be clear. Wherever there is the vocabulary has to match that. Is it okay? Fine?
Yes, sir.
Can I start sending from today onwards?
Yeah.
Okay, I will start from the beginning. Okay, I will start from the beginning. Lecture 1. Slowly I will develop the things. Is that? Slowly I will develop the things. So that if you practice the questions, by the time exam will come, you will be in a perfect position.
Sir, you will send it by email, you mean, or by WhatsApp?
Once I will post it on the group, but you have to send me individually.
Individually, okay. Okay, you will start from chapter 1 until what we have stopped.
Yes.
This is, sir, a question for section B, no?
Yes.
Okay.
Okay. You refer. Initially you will refer more number of times. But the moment you are getting practice, you will refer very less. Okay?
Okay.
Can I start 10B?
Yeah.
Okay, we'll go through it little bit, then we will see. In the video I am recording, it is continuation. Okay, it is continuation of 10A and 10B. Fine, so don't get confused. Okay, inventory, another important area. Okay, another very important area. Like I told you, two things really matters for us. The first one is your property, plant and equipment in the balance sheet. The second one is in the non-current assets inventory. Is it? Now, what is the procedure? Same thing. What is the procedures? How the inventory is audited? Is it right? IS 2. Is it right? IS 2. It is lower of cost. Lower of cost or net realizable value. Is it lower of cost or net realizable value? This is very important. That is the reason I am writing it in the beginning on the top of the chapter, first slide. Is it? This is the rule of the lower of. Okay, lower of cost or net realizable value. IS 2 says. Now inventory, we have done perpetual inventory, periodic inventory, how inventory should be counted, what we have to do during the inventory. Is it right? One question, compulsory question. I can say inventory, payroll, property, plant and equipment. Is it right? Sales. With these 5, you will get 4 anyway. Is that substantive procedures for the inventory? Is it? We will cover what is the introduction, how you have to do the inventory auditing, what is the procedure for accounting of inventory, what is the audit procedures we do. This is physical inventory count. We have to do physical inventory count at the year end. Is it right? Cutoff is there, valuation is there. Okay. Very, I am putting it very important chapter. Okay, you refer all the question papers. I can say that every question paper will have this. Is it? Every question paper will have this. What we are learning? What is the inventory counting procedures? Segregation of duties. Is it right? Segregation in relation to year-end inventory. External auditor, year-end inventory. Fine. With respect to continuous inventory systems. Process is there, 24 hours process. You cannot stop. Milk industry. Is it milk industry? Continuous process. You have water bottles, the drinking water bottles, continuous. Is that continuous? You have juice bottles, continuous. You have nowadays they got this one Kinja, something like that, replacement of Pepsi and Dew. Continuous process, is it right? When there is a continuous process, continuous inventory, we have to be very careful. Focus on this. See, if you ask me, I will put money on this. Means I will expect one question on this continuous inventory. Okay, what is the cutoff? Okay, 31st December. That's why I told you, banks 31st December they will not do any business transactions. Is that 31st December they will not do any business transaction. 31st December they will keep it exclusively. They will clear it off, all the backlogs. Auditors attendance. How we have to be there during the inventory. What is our role? Direct confirmation inventory if it is held at third parties. Most of the time the inventory will be in the warehouses. Now the business is there, warehouse business is the most demanding. If you have space, you are putting warehouse, people will use it, you can give it on a rental basis. Is that? If it is at the third party, what is the procedures? Valuation of inventory as per IAS 2. Other evidence relating to inventory. Explain what is the audit objectives and audit procedures. Closing balance. You see the thing. Whenever you are preparing the financial statements, they will give in the trial balance, they will never give inventory. Inventory will be given in the additional information. Is that? Inventory is given in the additional information. They say it is the closing inventory. Why they say it is a closing inventory in the additional information? Because this information they didn't receive by 31st December. They have received after 31st December. When they are receiving after 31st December, they have to make adjustments in both the places, in the income statement as well as in the balance sheet. In the income statement, you will say opening inventory plus purchases minus closing inventory. In the balance sheet, we are going to show in the current assets. This is the point of understanding when it has been given in the additional information. Is that what you are talking about? The same thing they have put in a graphical form. Okay, inventory counting procedures. Year-end periodic inventory. Is that period? The year-end is nothing but it is a periodic inventory. Okay, periodic inventory, and you have a continuous inventory, perpetual inventory. Is that? Continuous inventory, perpetual. You have two things. One is year-end and one is continuous. You have the cutoff, you have the other evidence in terms of valuation. Again, valuation, same procedures. Is it right? If inventory is going to be valued, it has to be valued by the expert. Understand point? One point you can use in two places. Is that valuation with little bit customization? Okay, little bit customization we can use. Okay, auditors attendance at inventory and what is the third party confirmations. Fine. Now, what it says, now you see the thing, we are still here only. Okay, we are talking about substantive procedures, but here we are focusing on where we are focusing on inventory. In the previous case, we are focusing on property, plant and equipment. Fine. Now, same that tables. I have sent you this table in the Word format. Okay, how many assertions will be there In inventory, there are 1, 2, 3, 4, 5 and 6. Now you compare it, okay? You compare it. Only thing is you should know. You will have existence, completeness, rights and obligation, accuracy. Only thing, if I remember rightly, the only thing that we are adding is cutoff. Is that the only thing? I will go back, okay? I will go back to the 10A, okay? I will go back to the 10A. I will go back to first slide, okay, where we have done, see the things. Here we don't have cutoff. Is that we don't have cutoff. Only thing what is there, we have 1, 2, 3, 4, 5. Whereas in the inventory we have a cutoff. Is that in the inventory we have a cutoff. Now I am comparing, okay? I am comparing and showing you the distinction. Is it right? Now, there is a reason. Automatically, the moment you go forward, things will be more easy for us. Existence, record purchases and sales inventory bought and sold. Is that goods received note? I will say goods received notes and goods dispatched notes. Inventory is working as a focal point. Is it right? Inventory will be the middle. One side you are receiving the goods, one side you are dispatching the goods. You should make what you are receiving and what you are issuing. Existence. Inventory on the statement of financial position physically exist. Whatever you are showing in the financial position, in the balance sheet, in the trial balance, that should exist in the inventory. Huge inventory, is it right? Inventory is a huge, but that's why we have to be very careful. Complete need. What is the complete need? It has to be recorded or purchase and sales. Inventory year end is included in the statement of financial position. Means the closing balance, okay? The closing inventory. Rights and obligation, as simple as that. Now I don't want to focus more on this. Is it right? It has to be purchased in the name of the business. As simple as that. Is it right? The entity has rights to inventory recorded in at the year end. Classification, it has to be classified according to the standards. Inventory cost. Is it right? In terms of cost. Inventory is recorded at the year end. See the thing. Lower of. Is it? Lower of cost or net realizable value. Is it? Cost or net realizable value. This is as per IES 2. They will test you this point. If they have given, make it a point, you must write this. And you have to mention that it is related to IES 2. Wherever is possible, you have to mention. All purchase and sales are recorded in the correct period. Before year end, after year end. Okay? Before and after year end. Is it right? Now, inventory is properly classified into accounts. Okay? Current assets. Inventory. Okay? That's very, very important. Disclosure, classification, valuation are adequate and in accordance with accounting standards. Read again once.
So regarding the closing inventory, you said it's received after the year end. It's not the balance of inventory which was not sold previously, so it would be recorded as reported as closing inventory.
No. What happens? See the things. Is that what happens? See the thing. Now you see the timing with respect to you talk about your bank. See, you are having different locations. Okay, you will have an inventory. You have in different locations all over the world in different locations. You take one country or you take separate countries. What will happen? Definitely there will be a time difference will be there. What are the reasons I am telling you? Okay, you will have a time difference. Now it is almost multinational corporations. Okay, you will have that time difference. Definitely, what will happen? What we understand is there will be almost 11 hours difference is there, almost 11 hours difference. Then all the if you take first of May, okay, there is a good amount of difference between east and west. Okay, not 11 hours. That is what happens. You are not getting the inventory rightly at 12 o'clock from our time. Is that if 12 o'clock our time in US, it will be 10 hours, 11 hours behind it. In some cases, 13 hours behind it. So what will happen? We are not getting inventory at the right. The first thing. And inventory, when you are talking about the inventory, is it right? Why we stop? I will say for the bank, cash is a inventory. Is it? Why we are stopping on 31st December? To make sure that there should not be a movement of cash. We try to reduce. We cannot stop. We try to reduce the movement. We try to reduce the movement for one day so that they should have some cutoff. In the same way, anywhere you see, what will happen? They try to reduce it. In some cases, we cannot stop it. Continuous inventory. Then we will get inventory physically. 31st, keep it in mind. 31st of December, whatever the inventory is there, it has to be checked, it has to be verified, it has to be approved or authorized by the senior management, by the responsible person. What is there at the end of 31st? You take your branch, you take your bank branch. It has to be the branch manager the cashier has to sign, the branch manager has to sign. This much cash was there during that date. You have to get the report from all the branches or all the branches. If you are talking about IT through software also, they have to submit online application form. Online you have to submit, and it has to be approved, it has to be verified that. Now, sometimes what will happen? Sometimes you will not get it on time. In previous 10 years, in every country, see, you are having this, but in every country it is not possible. In every industry it is not possible. Then what you will get? You will get inventory from different locations. They will say by 10th of January, by 15th of January. They will give some margin because high valued inventories will be there, fast moving inventories will be there, some inventories will be returned, will be there, sales returns will be there, purchase returns will be there. You want to know the net inventory. Some inventory will be the absolute inventory, outdated inventory. There are so many things will be there. Okay, this is not like that. It's only one thing. There will be so many complications. There are so many things. Then it will take time for us to get the right value. That is the reason the inventory will be shown in the additional information. It means that the information which we got for the inventory, we didn't get exactly on 31st December. We got, and we have not incorporated in the accounts. Okay, we have not updated the general ledger. We got the information after 31st December, anytime after 15 days. That is not our concern. There is nobody will tell that. Okay, but the rule is we got after 31st December, and that information should be incorporated. That is the concept of closing inventory. But when even you are getting the information, again I want to make, You are getting the information on 15th, but this information is very much accurately related to 31st December. The physical inventory present on 31st December, maybe they will get this information after some time, but that information is specifically related as on 31st December only. Is it clear to you?
Yeah.
Fine? Yes. That is the reason. Inventory, why people are so much concerned about inventory is one of the area. Okay, one of the area of errors, or you can say one of the errors of fraud. Fine. Accounting what? This is what we are talking in terms of audit objectives. Introduction to inventory. Now, what is the accounting? Whenever you want to stop, tell me, I will stop. Okay. Inventory should be valued at lower of cost or net realizable value. This is the rule. By the time we repeat again, it will be there in your mind. What is the all cost of purchases and other costs incurred bringing to inventory to the present location? It is not only inventory. Except I will make very clear. You are making a construction. You are purchasing cement. Is that you will pay for cement plus you will pay some transportation charges. It increases the value of inventory. You will say loading and unloading charges. Okay, loading and unloading, it will increase the cost of inventory. That is the reason. What they say whenever you are purchasing, they say CIF, cost, insurance and freight. Okay, cost, insurance and freight. Means this is the what we say. Means it includes cost, it includes insurance, it includes freight, transportation. Fine. This is what is a cost is all the cost purchases and other costs incurred in bringing inventory to your location. That is the cost. Net realizable value. What is the net realizable value? Selling price minus cost to sell. Is that selling price minus cost to sell? Is that somewhere we have not done financial reporting. That is why these things look new for us. But if you have done financial reporting, this is a piece of cake for us. Is that net realizable value? What is net? You want to sell, you will have some brokerage cost. You will have some selling and distribution expenses. You have to give some commission. Is it? Next. What you have to take the lower of the value. Okay? Lower of the cost or net realizable value. That is the basic condition. We are not doing calculations here. Understand one? We are not doing calculations here. Only thing is we are understanding the concept and we are interpreting the theoretical rules of IAS 2. Is that we are making the theoretical rules of IAS 2. This is what the rule of inventory as per IAS 2. Simple one, lower of cost or net realizable value. What is the cost? Total cost to be incurred, getting the inventory to the present location and the condition. Net realizable value, selling price in the normal course of business less estimated cost of completion or estimated cost to make it sale. Is it? This automatically, don't worry about that. The moment we are working, it will be on your fingertips. Okay, on your fingertips. Next. Okay, what we say, what is the procedures for inventory? Is that audit procedures? When we are talking about the completeness, Only thing, completeness with property, plant and equipment, completeness with the inventory. What we have to do, whenever you are saying trace test counts, is it right? You are counting inventory. Is that you are counting inventory, details of listing, whatever we have counted, traced back, whatever we have done inventory. Any audit has been done on inventory previously during the current period. During the current period, any time you have done counting. Okay, any means assume you are in the month of October. Any count you have done from January till October, just have a detail about traced counts of detailed inventory listing. What you have done, you have to take. Means again what we are doing, we are not going to go back. Based on the previous thing, we can go forward. Where inventory is held in the third party location, physically inspect this inventory. You have to, any inventory at the third party, you have to either you are inspecting physically, or a representative of the audit junior is inspecting inventory, or a audit firm representative is inspecting inventory. But it is on behalf of the audit firm they should inspect. Is that physical inventory? Inspect inventory and review confirmation received from the third party. See, when you are doing, I don't know how many of you are working in cash department, okay, where you are dealing with cash, you are dealing with inventory, specifically inventory. The auditors will come. Is it? The auditors will come. The moment the auditors will come, is it right? They will see what is as per the register, and they will see how much is the physical inventory. At least sample of inventories. They will see what is their inventories updated or not. Is that third party locations? You go to the third party, you will see what is the inventory is there, what is as per the register, and what is as per the ledger, and what is as per the third party register. Fine. Both should match. Both should match. They should not be. And once you are visiting there, is it right? You will take the photocopy of that. You will take the photocopy. The inventory manager or responsible person will sign it from the client side, and an auditor you will also sign. Fine. That is the primary document in terms of. Now, when you are talking of the completeness, gross profit margin, percentage, previous year or industry data, means whether what we are doing completeness, whether we are making an overvaluation or we are making an undervaluation. Gross profit margin, assume the gross profit margin is 20%. Industry is how much? Industry will be 18%, or industry average will be 22%, plus or minus. Okay, you will match, then you will say yes, we can get an idea, yes, whether it has been. You will ask me whether it is in relation to valuation. Now we are making a comparison of the gross profit. Is that we want to know whether it is up, because what's happening, the inventory is nothing but sales minus cost of sales. The entire inventory will be here, opening inventory plus purchases minus closing inventory. You will ask me why we are talking about gross profit. Is that because the entire structure comes here only? Is that the entire structure comes here only? We are not going beyond this. Automatically what will happen? You will calculate gross profit. Is that this is where we are talking about. Use the industry data, whether we are as line with the industry. Complete the disclosure checklist to ensure that all the disclosures related to inventory has been made. Automatically, yes. What will happen? Here we are using the checklist. The moment this is over, ticket. The moment this is over, ticket. Means you are at the planning stage, you will have a checklist. That whether we have done all the we have process or not, all the procedures, audit procedures we have done or not. You should have a checklist. Okay, that is what it talks about completeness. What are the completeness? Completeness is test counts, what it has been done. What is the completeness? Means we should not only have the inventory at our location, but you should also have the verification or review of confirmation of inventory in the third party also. Is that our location, third party? Then only it is complete. Okay, we should make sure that we have to calculate the gross profit for the current year and compare with the previous year. Not only with the previous year, we have to compare with the industry. Any fluctuations is there? Maybe we have sometimes we have included, sometimes we have not included. Automatically, what will happen? It will be reflected in the gross market profit margin. The fourth one is there should be a checklist, and according to the checklist, whether we have completed all the audit procedures or not. Fine. Next.
Sir, in the first point,
Tell me.
trace test counts. You mean the test counts provided by internal auditors
Client.
or performed by the external auditors themselves?
Don't use internal auditor. Use the clients. Trace test counts to the detailed inventory listing. Is that you have see what happens? Whatever we have tested previously, is it? We have tested somewhere in the month of February. You have done counting. Maybe at the end of every month you will do counting. At the end of every year you will do counting. Is that if you take sometimes daily report? Is that daily report you will do counting? You will say what is the end of the day closing balance, opening balance. Okay, you will do the thing. What you are doing? Yes, it has been done every as per the policy, whether you have done that counts or not. Is it? You have done for which inventory you have done. Whether you have done it for random inventory or you have done. If you have done randomly, fine. But if you are focusing on particular inventory, sometimes it happens. High valued inventory, you will focus more. Is it? Movement is where frequency is high. Frequency of movement. You will test those inventories. Is it? We will cover all these things in the later slides. Okay? Test count means where the inventory is made. If we have done any inventory count, you have to go back and you have to trace it down about the details of inventory listing. Is it okay?
Yeah.
Fine. Next. Is it? We will cover this. This is a simple existence. Observe the physical inventory count. Only one. Okay. Existence means you should know whether the inventory is physically exist or not. Observe. What you have to do? You have to observe the physical inventory count as such. Is it right?
But they will perform inventory count as well, right?
Yes, you observe. Existence means you will observe. You will see how they are counting the inventory. They are counting the inventory. There are various procedures. Is it right? Two people should do it. One from the inventory department. Is it right? One from the inventory department. One from the purchases department. one from the accounting department. Any two, at least two. Is it two people have to do, and two people should have the same list. Is it should be a pre-printed list. Is it a pre-printed list? It should not be. You should not add anything. If you get some new items, you have to keep it separately. Is it? If you keep it, once inventory count is over, then two people have to sign it. And in that process, as external auditor, you will do an observation for that, how these people are doing. Very important point, very easy point also. Is that very important point, very easy point to have. Observe the physical inventory count. Is it okay?
Yeah.
Fine. Can I stop now?
Yeah.